Ajay, so having said that, if you are a longer term investor wanting to be in equities, and as I heard you say that, okay, don't choose IT, fine. If you're a nimble investor, you want to put where the puck will be moving. Where is it that you find opportunity? In the past, you've given some completely non-consensus ideas which have worked beautifully. I remember tea stocks. I remember some of the agri and other agri commodity stocks. Now, where is it that you believe the biggest bang for the buck lies if somebody has more than a 12-month, let's say 18, 24, 36-month view?
I tell you, engineering, IPO stories is the two places that you can be listening that lots of new companies have come up in the engineering sector and new IPOs. I think those are the ones because with the fresh money in the kitty and the listed, these are almost debt-free companies. They've got good markets, global markets. And the best part, Europe is selling out in auto market. Lots of companies in Europe are not doing well. They're family-owned companies. They're all selling out. If you follow the trajectory of India's largest ancillaries, I'm not saying recommending it, but just give an example. Motherson Samvardhana. He has bought so many companies, but if you look at the back of the companies, all were mostly family-owned. All were not doing well. Family was not interested. They had good orders from large multinationals, and therefore he has swooped in them and picked them up and is doing very well. So I would say engineering, auto, I think are the two big name theories which should work well for the next 5 to 7 years. And we will be large. I'm telling you, we will acquire a lot more in Europe in the next couple of years, and we'll become the largest supplier to the engineering auto market in the next 5 years. It's very visible. That's one sector which is coming out very clearly that is going to give us the very good returns.
Ajay, can I just get clarity here? No, completely. I'm loving this answer, but I just wanted clarity here. So are you saying, for simplicity, auto components which are into autos as well as some of the other divisions now that they've branched into, right? Are those the companies that you're talking about?
Those plus engineering companies. We just had an IPO for a company which does turbine blades. Now they do it for the windmills, but they're now gone to orders for aerospace. Now suddenly that changes the dynamics of the company altogether at this point in time. So auto and engineering, I would put as one block, which is going to give us phenomenal returns in our view. A consistent market, global players, we are already there, but we'll become much bigger and superior returns. And in them, you see lots of new stories coming up in IPOs. So lots of smaller hidden gems are being discovered. We had an aluminum company being listed in the last 10 days. We had a turbine company listed in the last 7 months. So, so the theme is engineering, auto, even present auto ancillaries. They are doing a tremendous job at this point of time. So as a sector, I think it's a great place to be, great place to park your money. And you are playing a game both India and global in these companies. And you're not very worried at this point of time whether how many EVs got sold next month or tractors got sold or not. You are now talking about global market and you're talking of all these companies, Neeraj. Most of them have long-term contracts with global players. So, there'll be a company with a subsidiary, we'll see Mercedes-Benz has given a 5-year contract, or a Boeing has given a 5-year contract, or Airbus has given a 3-year contract. So none of these are transient, every month they have to go and sell the market. All of them sit on large contracts, and that is why they are consistent multi-baggers in the market. You saw the Spanish company, Auto company, which has done phenomenal for the investors. So engineering, auto, I would put in one block. And also please look at the new IPO stories. Each of them comes out with a gem, and there are at least 30, 40 in the pipeline. So they're going to be good supply of paper. So for investors, it's boom time. That's what I said. There's so much coming your way, man. Why would you want to sit with a foggy investment?
What has impressed you the most, Ajay, in the IPO pipeline thus far, or IPOs that have come out thus far? Because each company is a bottom-up idea, right? You can't paint it with one brush.
I think one of the most, I'm not recommending it. I had it so just for purposes. I'm saying, I think Azad has been the most impressive debut in the market, and his plans are just phenomenal, absolute phenomenal. And please don't take it as a recommendation because this is again the company aspect. Turbines, it already addresses the market of turbines, wind blades for the market, okay? But it has moved on to wind blades for the aero market. Now that's a niche. That's a market which we're talking about EBITDA margins of near 60-70% EBITDA margin company. And he said what? He wants to grow his capacity by 7 to 8 times. We're not talking of 7%, 70%. We're talking of 7 to 8 multiple capacity increase. Sure, there are risks. Sure, there'll be slippages. But that's the vision. That's the kind of company which gives you comfort that, yeah, if I want to bet my risk money, This is the kind of companies you want to bet your risk money with, who think in a vision of being global suppliers of high quality, highest end product, and with a margin of 70%. It's just unbelievable.
So, Ajay, would you say, therefore, that the right lens to look at some of these businesses is not just from a perspective of FY26 PE or EV EBITDA multiples, but extend it a bit further because the growth rates can stay higher for longer?
You have to. And I think that there's a lesson. If you look at the global PE investors here in the last couple of years, all of them, you punted for companies over 4 to 5 year vision, and all of them made superior returns in secondary market. All of them, PE fund, if you look at the track record, if you look at the track sheet of them, the global PE funds, I'm talking about large investment, they made a multiple of 33% IRR, 44%, 50% IRR, and thereabout. And if you take the investors in the fund, in the companies like new age companies, it's multiple. It's not like 40% IRR is growing 10 times, 20 times. So as a prudent investor, we also should take the same view that good things will happen, bad things will happen in a year, quarter, next quarter. But at the end of 3 years, do you see this company positioned as a global competitor, as a strong Indian player with strong margins? I think that's the bottom line at the end of the day. If you feel comfortable, I think this is the market where you can be most comfortable with. That's why I said engineering auto is the market where India will lead at this point of time. And I think if we get some incentives on, labor, land, and other stuff in the budget, we will do exceedingly well. So all in all, I think we have a great story in India out there. And I think we need to play it just the way pharma played out once upon a time.
Got it. Wow. Well, this calls for maybe a conversation yet sooner rather than later, Ajay, because we'd love to maybe do a conversation only on what is impressive from a new age company perspective or a newer listings without getting into recommendations, just the nature of the businesses that some of these companies might be having. Looking forward to do that conversation soon, Ajay. Thank you so much for your patience today with us.
Welcome.
While you were waiting. Really appreciate that.
Have a great time.
Yep. That's Ajay Srivastava with some of his thoughts. That's all the time that we have on this edition of Talking Point. Thanks so much for tuning in.